In this video, I'll be breaking down how much you need to make in order to afford a 2023 Audi S4. You should really consider following one of these rules in order to avoid making a huge car buying mistake that'll end up setting you back for years to come. I've also included a link to a free auto quote where you could save up to $600 a year in the description below, but more on that later. There are 4 options I'll be going over today, and you can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation. Some are willing to sacrifice quite a lot more in order to get the car that they really want. So stick around to the end of the video to find out what method would be best for your personal situation and preferences. This is 4-Wheel Finance, a channel dedicated to helping you make smart financial decisions. Before I dive into this first rule, these videos take quite a lot of time and effort to make. Please give it a like, subscribe, comment down below what other vehicles that you would like to see. First rule I'll be going over is the 24-10 rule, and this states that you must put at least 20% down. You shouldn't finance it for more than 4 years of 48 months, and the payment shouldn't be more than 10% of your monthly gross income. Since the 2023 Audi S4 has an estimated MSRP of around $52,400, you'd need to put down $10,480. And with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $943.89. Take note that you're also paying about $3,300 here in interest. Bankrate states that the average monthly insurance cost is $148 a month, but this varies a ton from person to person, where you live, your age, your gender, your driving history, etc. So use that smart financial link I've got down there in the description to find out how much it would cost for you to insure something like this, or if you want to see if you can drop your own insurance. It's completely free, takes like 20-30 seconds to fill out. This brings your monthly total to $1,091.89. Going back to that 24-10 rule, this would mean you would need a monthly gross income of $10,900, which would add up to about $130,000 a year. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car or $5,000 car and put what would be your car payment of $943.89 in the market instead, over the course of 5 years and a conservative 6% rate of return, this would turn into about $65,900. Gaining almost $10,000 here in interest. Take a look at those Acorns and M1 Finance links in the description below. It's super easy to get started investing, and I encourage you to get started as early as you can. Even a small amount of money can turn into something pretty special over a long period of time. And this is just for the first 5 years. If you were to continue that for 10 years, it would amount to $154,103. Again, just at that 6% rate of return. And for reference, the stock market averages around 10% return per year, so my 6% estimate is pretty dang conservative. The next rule I've come up with myself, and for my rule, I think you should have at least a 6-month emergency fund. You should invest 15% of your gross income into your 401k, and max out both your Roth IRA and ideally your HSA as well. And I know this sounds like quite a lot of saving and investing, but beyond that, I don't give you a monthly percentage rule that you have to stick to in terms of spending. So it's up to you to decide if you want to spend more of your monthly income on a vehicle, or if you'd rather spend less on a car and spend more on going out to eat more, going on vacations, etc., things like that. And that 6-month emergency fund, just make sure that you're covered in the case of obviously emergency. I think that's super important, especially for people working in an industry such as sales or commission-based, where that monthly income isn't necessarily the same. And there's a lot of people out there that say, well, nothing's guaranteed. You should live your life how you want to now. And it's true that nothing's guaranteed, but on average, people live to about 78 years old, and your future self's going to thank you if you get started investing now. The next rule is the Dave Ramsey rule, and he thinks you should have at least a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your gross annual income, and you should purchase it in cash. Given that the 2023 Audi S4 has an estimated MSRP of about $52,400, this would mean you need a gross annual income of about $105,000. Ideally, it's nice to buy a car in cash, as you would avoid having to pay that $3,300 in interest, and your insurance would be a little bit lower. But obviously, not everybody has $52,000 in cash that they can put towards a car, and there's a good chance that that money might make more if it was invested in the market. Final rule I'll be going over is the 1/10 rule, which was developed by Financial Samurai. Personally, one I think that the majority of people trying to build their wealth rapidly should consider. It really doesn't allow you to buy a new vehicle, but it allows you to spend responsibly, which reduces your financial car ownership stress and increases your net worth a little bit faster over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a car. It can be new or used, but it's probably going to be used for just about everybody unless you're making an absurd amount of money per year. And you must own it for at least 5 years, but ideally more. And the theory behind this here is to minimize your financial stress, frees up a little bit of money to invest in assets or opportunities that may come your way, things that are going to go up in value. It's much more stressful and difficult making life decisions when you're worried about payments each and every month. Once again, this is 4 Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them down there in the comments below. And don't forget to give a look to that Smart Financial link. You can save up to about $600 a year on your own personal car insurance, and it's completely free. It takes like 20, 30